how often should I review my policies? And your renewal is a good trigger to think about this, but you certainly don't want to be changing your policies every year. So once you've been through underwriting, you've got your offer, you've accepted, your cover's now in place. Your contract with the insurance company will run for as long as you pay the premiums. But at the end of the first year, usually about 11 months in, they're going to send you a renewal notice. So your cover will go up by inflation, or at least they will offer you increased cover to take into account inflation. And usually the premium will go up because you're a little bit older. So insuring a 32-year-old is more expensive than insuring a 31-year-old. And so the premium will usually go up, A, because you're buying more cover, and B, because you're getting older. And then C, because insurance prices generally have changed. And that's a bit of a function of their claims history, the lapse rate, what the investment markets are doing, and how accurately they've estimated their loss rates. So at that point, you now get to choose, do I take this indexation? So if your income hasn't gone up, you might not need indexation. But for most people, their pay goes up and they need to increase their cover, since your cover is fundamentally driven by your pay. And then the premium will come out of your super fund or from your credit card, and life goes on. If you choose during the year to reduce or cancel your cover, you'll get a refund for the unused piece. Renewal's a good time to think about it, but it's not critical that you do it on that day. And you've usually got about a month's notice to look at that. But what you should be doing, and it's a good trigger to think about what's happened in my life that might change the level of cover that I need. If you've got a new job, change your occupation. So if you were a tradesperson, you moved up to being a foreperson or project manager, your risk category has now come down. So that might be a really good opportunity to get a lower premium because you're in a lower risk category. The converse doesn't work, that if you start off as an accountant and you become a carpenter mid-career, you still get to keep your accounting rating. So that's a bit of a one-way bet, that one. You might get married, you might get divorced, you might have an extra child, you might take out a bigger mortgage. All of these things are things that might trigger a need to review your cover. So there's a few triggers in the year. Obviously, renewal often makes it front of mind for most people. I like to do a lot of this sort of thinking on the day that the clocks change. So for those of you on the East Coast, at least New South Wales, Victoria, ACT, Tasmania, South Australia, clocks go forward in the spring. So we're about to do that next weekend, and they go back in autumn. So just as the fire department says that's the day you should change the battery in your smoke detector, it's a great day to sit and mull what's changed in your life over the past 6 months that might trigger a need to review both your insurance plan and potentially your other financial plans. It's a better day than your birthday because you're less likely to be doing something else. It's a better day than New Year's Day because you're likely to be doing something else, or Australia Day. The day the clocks turn back or forward is a great day to think about these. So that's often my day for contemplation of these things. You're also like to be a little bit out of sorts because you've had too little or too much sleep. And so it's a great time to think about it. But definitely you need to have this regular thought, what's changed in my life that might give rise to a change in my insurance requirements? And they're those sort of changes to your family structure, changes to your assets and liabilities, change the nature of your work or get a pay rise. Particularly important in your sort of 20s and 30s where your pay might be rising rapidly, less of a deal in your 40s and 50s when it's ticking up at inflation, which your indexation might cover off. It's a good time to think about it if you're thinking about having a family, particularly if you're female. Great time to do it before you get pregnant. That's the time to review a lot of these things. So they're sort of the triggers. It's not like your car insurance where every year I get my renewal, I go and test it in the market. As it happens, for the last 15 years, Allianz's renewal has been competitive and I haven't moved. But every year I go through the charade of testing it out. That's not how life insurance works. You really only want to be moving when your insurer becomes non-competitive. So what we've seen this year is there's been a few acquisitions. So AIA took over a few other insurers and they've become relatively less competitive. So that might be a reason to revisit and go, that's a bit of an increase. The difference is big enough. I might be prepared to forego some of the benefits in my older policy, which I can't buy today, or the risk that I might get an exclusion or a loading on a new policy. So it's not as straightforward as getting like-for-like cover with one car insurer over another. And that's where a good advisor comes in. So we're in the market every day. So we see what's happening with these policies, and where we see an insurer getting uncompetitive, we'll reach out to our members in those insurers to consider changing it. May not be practical. If your health has deteriorated significantly, you want to hang on to the cover you've got. So the great thing about fully underwritten insurance is once you're in, they can't change the rules on you. And as long as you keep paying your premium, you get to keep your cover, regardless of how risky you become. And that's one of the big differences between standard insurance in your super fund or default cover with a fully underwritten retail cover, even if you pay for it from your super fund. Very important.